Hello, welcome back. And in this one, we are finally. Last week we were positive. This week we're outperforming, right? So we're outperforming SPY and DOW. We're really close to NASDAQ. And so that's the major breakout or update. 2% basically return. So yeah, those are the main points, but there's a bunch more details later on. So let's do this. Total percent performance, right? So here we can obviously see that this was last week, great huge boom here, and then now basically 21st to here I've been doing the 80-20, and that's, I've said it before, but I think this is actually where I'm not going to change it because it has been working well, and I really think it's just going to keep on working. Really, this was just the whole period of an idea, my short, that did not work. And so this 80% 20 thing, if from last week, is 80%. The market always holding no matter what, and that 20% is what's being traded, so as an edge. So here we have total dollar performance after fees, so this is a bit more important as you have compounding affected in here. Same with the losses. So if you lose 5% and you make 5% back, you're not going to be where you started. So that's an important part. If you lose, you have to earn more. And so here we kept on going. We actually hit a new high. So if we go back here, you can't really see it here, but we hit a new percent high, barely on top. And so we're back on the grind and we're back on top. That's what I'm talking about. So last week was red. So last week we earned a lot because of that one day release, kind of an outlier. If you take out that day, we still earned a bit more that week, but this week started a bit negative and then just straight line up. So that's great, around 1%, I think it was. All right, so comparison to NASDAQ. So this is the only one we're underperforming a bit. We grew at the same rate. But here, right here, we were like super close to outperforming, and then during the middle of the day on Friday, we were outperforming. Same with Thursday, and then at the close, we ended a bit below, but it's light, it's good. So this week was a 1.02% after fees. All my percentages are after fees. NASDAQ was only 0.173%, so that's good. We only outperformed one of the days though, and that's mostly because the day that we outperformed was a big loss for NASDAQ, and we actually earned that day. If I go back, you can see that it was this drop, and we did not drop anything. So that was mostly that. The rest we were just barely below NASDAQ. And then, so basically overall, we've outperformed 40% a day, so 5% down. This is the only one that's gone down. I feel like when NASDAQ starts to get hit hard, this number is going to start to go up a lot more. And then here's basically the overall. So NASDAQ, if you would have put it in since we started, you'd be at 2.56, and right now we're at 2.06. So we're basically the same. 1.5 difference could be a difference of one day. So we're really close. SPY already outperforming. SPY actually ended a lot more negative this week. So here we have almost negative 1% around there, and we earn 1%. And we outperformed here. You can see a lot more, 80%. Only one day we underperformed. Overall, so here we went up actually 7%. So 45% last week, 52% this week. And if you would have put in your money, you'd be around 1.7 and 2. So a 0.3 difference, which is quite big. So Dow Jones has been hit quite hard, really hard over here. And I think that really signifies tech right now, AI, right, more boosted. Dow Jones, banks and all that, not as great in a way, even though the bank earnings were good, or mostly like industrials and all that, not great right now. And that's pretty much just been going down. And I think it's probably going to have a ripple effect onto tech. We'll see, as war has also started in Iran. So, we'll see how Monday open goes. So here we have 1%, right? And then so Dow ended really bad, negative 2.7 basically, outperformed 4 out of 5. So yeah, Dow was really, really bad. Any of these 1 weeks can happen to NASDAQ. In one day NASDAQ can fall this amount easily, right? I remember in beginning of August it fell 3 days straight, something around this percent. So basically it's just a matter of time. The good thing is we have that SPY holding, and basically if it falls, then let's say 2 point whatever percent, then the 20%, let's say on the 20% holding a short, we'll either barely be negative, neutral, or earn a bit. We won't lose as high as or as low as this. So it's pretty, even if we start falling, the market starts falling a bunch, it's pretty light. It's not that bad. So this grew by 6%, so we outperformed 56% of days for Dow Jones, 50% from last week. And then so only if you would have been in Dow Jones, so you've only beat out 0.19%, and right now you beat 2. So Dow Jones right now is not looking very good. So here I have it labeled right here, so it's easier to see. But red is basically us. Dow Jones, you can see, is going really down right now. Nasdaq hit a good recovery over here with the yellow, and then green is S&P, which is kind of like weirdly stabilizing but kind of falling. It's not knowing where to go right now. Most likely it's gonna fall, I guess. I don't know. We'll see. My method is don't predict it. You just see what's going on, and then you just make your decision on that. It's literally that easy. You see you were on a green day, right? Or let's say you open good, and then you're like, okay, well then, not all green days end up green days, but you get an idea of what's happening, and you just make your decision on the available data, and then you just do that instead of thinking, okay, what's going to happen in a week? Well, in a week, anything could happen, right? So we'll see. So here, instead of doing it only by week, I did the whole timeline. Here you can see kind of the history. This is the downfall period, and this is where we're recovering. So these 3 straight days are great. Anything that's like this outlier kind of messes it up, and these have been messed it up a bit, right? These low points. But anything that's like, these are the end of the day percentage goals. So our goal is 0.17 around there. So these are 0.53. So really anything under the line over here is great. Here we're not doing good, but it's pretty. These last couple weeks have been good. Last couple days have been good. So here we have weekly, daily percent gain. So we started off the week losing a bit, but basically the exact same as SPY. Dow took a really big hit. Then on Tuesday, we did take a greater hit. So the diversification did not help in that case, but Nasdaq still remained green, which is surprising. But then SPY and basically neutral. It's all right. And then really the next day is when we started to see the effects. So here this diversification helped a lot here, and so basically we saw like Nasdaq absolutely down, SPY, Dow, and we even went up like half of this amount. Then afterwards we even went up the next day more than SPY, and not as much as Nasdaq, even though Dow has been negative every single day. That's pretty bad. I just realized that. But yeah, so then SPY went up a bit, but we doubled SPY, but not as much as Nasdaq. But it's all tech heavy for Nasdaq, so all right. And then basically the exact same here. And then here SPY went a bit below, and Dow even more negative. So Dow did really bad this week. Yep, not great. Green, 15 green, 10 red. So the reds increased, but the important thing is how much are you losing. If you're barely losing, then it's fine to have a good amount of red days, right? So I think that's the next slide. Or yeah, I also added, this is the mean profitable trade. So like if you I guess a trade would be a buy and a sell here, but what I mean is like how many trades have I made money when I bought and then I later sold. So I guess you could call it, yeah, trades is the right word, my bad. So 63%. You can think, oh, this number is quite low, right? But it all depends on your mean. So is that the next slide? Yeah. So your mean here, my mean is 0.62. We went barely down from last week. However, we decreased our loss by 0.1, so that's great. So that's the important part. If you're winning 0.62 and losing a bit more, then and you're gaining 60% of the time, you can just do a quick multiplication right now. So you would do, let's go back up. So 63% times 0.62, so that would be my gains, right? And then you could just subtract it, right? 1 minus 0.62, right, to get the opposite of that, and then you want to multiply times 0.73. So basically right here I'm just counting, like, out of the ones I'm winning, how much would I normally win, and we end with a positive value. So long term, we ended with 0.11. So positive long-term view of this, these are good numbers, and that long-term view it should remain positive around here. Or later on, we'll see how the risk is higher than SPY, and that's what I hope to decrease. So the 63 numbers, it's all right, you know. So yeah, the average loss for SPY, I didn't do this last week, but for the whole overall, it's 0.45 and negative 0.4, so they're very close. And so I kind of just have this formula here, and it's kind of like a goal. So this is the average win for HR capital, average loss for HR capital, so you divide it. Then you have the average win for S&P, and then average loss for S&P. So basically the idea is we want to compare, okay, so how much are you winning and losing? So you want to compare the risk levels, right? Because you can gain a 20% on an earnings call and beat the market for basically, I don't know, 2 years. But your risk level is incredibly high. And so that's the idea with our risk level. So here we're just comparing the average win and loss and the average win and loss. And so we want to be equal. So like if you would have had one day in which you earn a bunch, then this number would be huge. And so that would not be good. You want it to be close to this. And so we're getting closer. The loss, if we want to get to this number, would be 5%. So, I mean, I'm not expecting another 0.1% decrease. That'd be a lot more. I mean, like a lot greater. I don't think it would be there. But over time, if S&P starts falling, we start gaining, then this number will start to decrease, right? And so it'll stabilize around that area, but the loss would be 0.55 and our gain would be 0.82. The gain I see more probable, but we'll see. So mean transaction, so last week it was 2.9, now we're at 2.68, so a good decrease. Day trades have decreased a lot, so from 1.2 to 1.08, so that's a good amount, 0.12. We want this to average around 1, which makes sense because I'm going in at the beginning of the day and then closing at the end. So an average of around 1 would be good. Sometimes 0, I think I left it 1 overnight, 1 position this time. But like rarely it should not happen. Transaction history, this is the whole, since the beginning. So we're basically, you can see we are decreasing a bit around here. We increased and then we decreased. And it's all right. The volume activity should remain around 1 and 2. Right, so think about 2 transactions would be 1 day trade. So in the same day, this would 1 on 1 would be 0, right? So 0 day trades, because a day trade is considered a trade you open and close on the same day. And in this one, I opened it, I bought it, and then I sold the next day. So it would not be considered. In these cases, it would be 3, here be 4. Here I was opening the whole portfolio and reclosing it all, so it was a lot more risk managed, right? I didn't want to leave stuff overnight. And, I did well this time period. Then here I was basically just letting it roll, did not go good. That was mostly because of the 80% short unleveraged I had. But yeah, that's all right. So week's fees, very low, 4 cents. I think this is what it should be around there. Coming weeks, nothing to 10 cents. I doubt that. So 2.068% return after fees. So really good week. This coming week, we have tech earnings. So Nvidia became again #1 company in market cap size. So big volume, big volatility, probably gonna happen. War just got announced on Friday, and so basically, big volatility right now. Either way could go, right? Either way. So we'll see what happens, but just correctly risk manage from there, and I think it should go pretty well. It should go well. Yeah. So hope to see next week, maybe 2.5 around there. That'd be pretty good. 3% would be great. 1% would be great. I'd love to see that. However, if there's 1-2% decrease on NASDAQ, right, that's already gonna put us that's supposing I correctly manage that 20%, we would be pretty much neutral, and then we'd easily be outperforming it. And so and we'd probably even earn, and then we'd probably go up quite a bit. So any one of these big days, you have to be very careful. A lot of movement was happening pre-market and futures market. And a lot of the movement during the day was going on. Like if you would have bought at market open and close, you'd mostly be negative last week. A lot of the movement was happening pre-market, and I think NYSE, they want to make their trading day something like 22 hours or something crazy. That's I don't know when it takes effect, but if that happens, I think some of my ETFs that are on my watch list are NYSE, and that'd be pretty bad. I wouldn't like that, right? I don't know what effect it would have. Probably spread the volume during the day overall, but I don't know. Maybe at like 6:30, there's still a big spike. Who knows? But that, I don't know. It seems kind of weird as we already have pre-market, right? And after hours, why do you need that? You also, some ETFs are 24 hours traded, so you can still trade like 24 hours on some of them that are approved, and those go with futures. So like, I don't know why you need that, but all right, we'll see. See you next week. Bye.